name is Ken. I'm here with co-founder of Staking Rewards, Merkel Schmiedel. And today we have with us the guy who founded one of the fastest growing crypto data aggregators, Nansen. Welcome, Alex Svanevik. Let's jump right into some lightning round questions here, guys. And Alex, what was your first investment outside of BTC and Ethereum?
Oh, I said of Ethereum as well. I think it was Kyber Network.
All right, that's a good one. And what do you think is currently the most underrated crypto project?
Judging by all the FUD on Twitter, maybe it looks rare.
Okay. And which alternative crypto data aggregator inspired you the most outside of Nansen?
That's a really hard question. I think maybe, did you say crypto data aggregator?
Correct.
Honestly, I don't think there were any good ones around before Nansen was created. I don't mean to slam anyone else. I just literally don't think there was anyone. I didn't use anyone at least.
All right. And like, who in the crypto industry do you respect the most, or like who inspired you on your journey?
I think, it's a boring answer, but probably Vitalik. For a few different reasons, like obviously creating Ethereum, but the fact that he's managed to withdraw himself from the project as well is quite impressive. I think not a lot of leaders manage to do that successfully.
And I believe at this point, every guest we've had on the show names Vitalik, so he is quite inspiring figure in the space. And what percentage of your portfolio is staked?
I guess it depends a bit on how we define it. So percentage of Ether or percentage
overall
of
stakeable coins that you have. What amount are you participating?
I think less than 10%, less than 5%, unfortunately. Yeah.
All right. Yeah. And what is an activity you do to relax from wild crypto markets?
Yesterday, I was playing Rocket League for the first time. So I just moved into a new place and have a Nintendo Switch set up. And that was actually pretty relaxing, I have to say. It's a good way to disconnect from everything and just focus on playing a video game that has no meaningful purpose.
There you go. It's always a good way to disconnect a little, play some Rocket League, maybe some FIFA too. And today we're gonna get into it. We're gonna talk about Ethereum staking, DeFi staking, crypto data aggregators, and more. As a note here, today's episode is sponsored by Lido Finance, and Lido is the market-leading liquid staking solution. With Lido, you can stake Ethereum, Solana, and Terra while keeping full liquidity via staking derivatives. And these are the staking derivatives you can use in multiple DeFi applications to generate additional yield. So a lot of opportunity going on there with Lido, guys. Be sure to check out Lido Finance. All right, Alex, and now we're getting into some of the long-form questions. So what is the most interesting data that you regularly check at Nansen?
I typically check NFT data these days. So I will look at what are the NFT collections that are hot right now, what's pumping. But also there are a few NFT collections that I regularly just visit to see how they're developing. So some of the blue chip ones like Bored Apes is pretty interesting because it's maybe at this point an indicator for like the whole NFT market. I look at some of our NFT indexes as well. So we have a blue chip index that I use to follow how the NFT markets are going. And then it's also really good to look at smart money indicators. So for example, which tokens are being accumulated by what we call smart money and which tokens potentially they might be selling as well. So we have this I think the landing page of the Nansen account is pretty much like the main stuff that I look at every single day. Also like capital inflows into new smart contracts under the hot contracts tab. So yeah, these are some of the things that I would check on like a daily basis.
That's cool. Have you actually like checked out or like are you into like NFT staking? Do you know any like have you looked into that, or like what's your take on that?
Yeah, I have to say I'm a little behind on that, but I do think there's some interesting stuff that you could do there. So, for example, I could imagine certain access rights. You could actually, if you stake the NFT, then it's a little bit easier to manage the accesses for whoever the staker is. And I guess another use case would be to actually generate some kind of token or yields on the NFTs that you stake. But yeah, actually, it would be nice to ask the question back to you if you know of any like projects that you've seen, because I think there's something interesting there, but I haven't seen that many applications of it yet.
Yeah, I think most of them are still like just like general like you get extra perks and benefits from staking NFTs in the protocol, like even additional yield and so on. I've seen some of that, so yeah, there's certainly some. Yeah, and then like you also have like quite like obviously Nansen, like you focus primarily on Ethereum data, and then Ethereum staking is coming up soon, so. Like, do you have any like interesting takeaways looking at the Nansen data for Ethereum staking and like staking inflows and so on?
Yeah, so you mentioned Lido as a sponsor, and we have a Lido dashboard actually that tracks how much ETH has been. So there are a few different dashboards there, and actually some of them are public, so you don't need to have a Nansen account. So maybe one example is the Lido dashboard. So you can find this at pro.nansen.ai/Lido. And you can see how much Ether has been deposited into Lido. And it's, I think, around 1.9 mil Ether, which is an insane amount. Not, to be honest, not something I expected first time I heard about Lido, because it's at this point become a massive staking provider. And in this dashboard, you can also see, what are some of the addresses that have deposited the most Ether into Lido or have used Lido to deposit Ether. And for example, the second biggest one is 3 Arrows Capital. And if you go further down the list, and so they've staked 50,000 Ether in one transaction. The largest one is 62,000 Ether, which either is also 3 Arrows Capital, but with a different wallet that's not labeled, but more likely it's some other large entity. And then you also see Nexus Mutual, who have staked Ether. You see Gnosis, who staked Ether as well, I think 22,000. And then another 3 Arrows Capital. So there's actually some really big names who have used Lido to deposit funds, even if it is like a decentralized staking product. You can also obviously use it if you're a larger player who in theory could be running their own nodes, right? So that's pretty interesting. The other thing is we have a dashboard called ETH2 deposit contract. This is also available for free, although the URL is a bit more clunky. pro.nansen.ai/ETH2-deposit-contract. And there you can see that almost 10 million Ether has been deposited in total. In other words, a huge proportion, almost 20%, is actually Lido. So this is pretty interesting. And if you go past Lido, you have Coinbase and Kraken as the other two large entities that have been depositing Ether into it. Of course, with those entities, in theory, it could be their own assets, but more likely it's the assets of their customers. So yeah, those are some of the takeaways that you can see right away in Nansen.
Yeah, very interesting trends to follow, with definitely some big players involved there with the inflows into the staking contract and the Lido products as well. I think the ability to stay liquid is top of the mind in all investors, and when you have lockup periods that are unknown, like with the ETH 2.0 staking contract. Getting into the next question here. So staking is used as a concept by hundreds of DeFi projects without really any security modules, like it is in Aave staking, for instance. What is your take on those specifically? Staking projects without security modules?
Interesting question. I think obviously there needs to be some kind of there needs to be some kind of mechanism in place in case things go sour, or in case things go south. I don't have any strong opinion on how to implement that, but it seems to me that there are lots of good decentralized insurance products and platforms that could be useful in this context. I believe, for example, Lido is at least partially insured on the assets that are owned there. I'm not exactly sure how the security module works for Aave, but so I wouldn't say I have any very strong opinions on that topic.
Yeah, I mean, it works like an insurance. So you basically stake into an insurance pool, and if there are any shortfalls in the protocol, then the staked Aave tokens function as like a as a way to bail out like anyone who really lost money from depositing stablecoins into Aave, for example. That's how it is. But yeah, I mean,
okay,
yeah.
Yeah, I mean, you do want to ideally have some kind of fallback. Of course, then someone needs to, someone needs to be incentivized somehow to basically pick up the bill for that insurance as well, right? Which I guess the stakers are doing in the case of Aave. Yeah, so I think that makes sense. In the case of Lido, I think they're basically just paying for insurance with the DAO treasury. I think that's how it works. So that's a different model, but yeah, it's an interesting topic.
Yeah, certainly is. And then, so want to touch a bit on like you mentioned like Three Arrows Capital and Gnosis like depositing large amounts of money into the contracts, and how do you generally like categorize the behavior of whales at Nansen? Like, are there like certain clusters of people, or like do you cluster them, and what are the most common clusters? Like, I don't know, short-term traders, long-term investors, NFT collectors, or like what are the whale clusters on Ethereum?
Yeah, so there are basically two types of labeling we do at Nansen. One is entity labeling. And so this means we know specifically that this address belongs to an entity. And so the example I just gave you with Three Arrows is one example. Or this address belongs to Coinbase or Kraken or Lido, etc. The other category is behavioral tags. So, for example, we might not know who the entity is, but there are certain behaviors that we can observe on chain, which allows us to classify them. So, for example, we have this umbrella term that we call smart money. And these are addresses that typically people are interested in following because they have done well in the past when it comes to trading, investing, flipping NFTs, yield farming, and so on. And so under that umbrella, you have things like smart NFT minter, smart NFT hodler, smart NFT early adopter on the NFT section. And then on the DeFi section, you have things like smart liquidity provider. I think we also have a tag that's called smarter liquidity provider. I don't know if it's like an internal term that we use, but or if it's actually in the product as well. But the idea is that you can look at how much yields that certain addresses have been generating, and instead of having to go out on like crypto Twitter and Discord and talking to your social network on Telegram, you can just look at what addresses are doing on chain, right? Which is kind of the no BS version. So when it comes to whales, I mean, many of them fit into these smart money categories, right? Because that's in many cases how they became whales. That they actually did really well investing and stuff. So and then we have a few other labels that we have historically used. I think the first one was like we had a DEX trader classification, like DEX trader, medium DEX trader, heavy DEX trader, and elite DEX trader. We still have that, but it's not as visible as it was in the beginning because when we first started Nansen, we didn't have that many labels. So pretty much like any address that was active with DeFi got the medium DEX trader label. So it became kind of a meme over time. Now, thankfully, we have a bit more variety and a lot more coverage, both on the entity side and the behavioral tags. But yeah, so those are some ways that or some different types of labels we have.
Definitely, and thanks for giving more insight on the smart money tag there. I know Jamie T from the comment section was interested as well. And that goes for anyone listening or watching right now. If you have questions for Alex, feel free to ask the questions in the chat section, and we'll address those at the end of the show here. So Alex, what average percentage of stablecoins are in the biggest whale wallets or portfolios these days? Is there a way to create some global metric out of this average percentage of stablecoins?
Yeah, that's I don't actually know the number top of my head, but we do have something similar, which is basically if you take the aggregate portfolio of all the smart money addresses, how much of that portfolio is in stablecoins. So maybe that's the same thing you're asking, but that's something that we have tracked for a while. And last time I checked, it was sitting at around 10 to 12% or something like that. I don't have the number in front of me right now. It might have changed. That was a few days ago. I think I saw it. So and it's interesting. It does stay relatively constant, but it does also trend in certain directions. And we want to do a bit more back testing to see how it correlates with other metrics. For example, could this metric help predict overall market movements, right? Is it sort of a gauge of sentiment? That was the initial impetus for rolling out this index. And so I think as we refine the smart money segment and as we do more back testing, we will be able to say more categorically that, these types of indices can actually be used to can maybe be used to inform investment decisions as well to some extent. But it's still pretty early days, and so we haven't really fully back tested all this stuff yet, but it's actively being worked on right now.
Yeah, that's really cool. And I mean, you could probably also just look at the total stablecoin market cap compared to the crypto market cap or something, but it would never be as interesting as like looking at like the whale wallets and see like, okay, are they like, do they think this is a market, or like are they scaling out or in?
I think you're absolutely right. Like it's really interesting to compare kind of if you just take the whole market, what is like the aggregate portfolio of the total crypto market on, say, Ethereum, for example. What percentage of that group will have, what percentage of that is in stablecoins? Now, this is actually much harder to do in practice than it is in theory, because there's all sorts of like sort of scammy tokens out there, and like you have to build out proper filters. But you could do something like, maybe let's look at whatever is whitelisted on CoinGecko or something like that. And if you then, as you were saying, like that's interesting, but if you do the exact same thing, filtering it down from say 200 million wallets just to 4,000 wallets or something like that, how is it different? And does the smart money sort of act in a different way than the rest of the market? And we've done some attempts at this before. So we did something similar where we tried to look at the overall portfolio, like which coins are more commonly held by smart money versus the rest of the market. It was more like a proof of concept, so I don't think the result the analysis we did back then had any very interesting findings. It was more like, I vaguely remember that there were a few stable coins that were preferred by smart money investors. I think some of the Aave stable coins, meaning that they had locked, say, DAI or USDC in Aave, was one that stuck out from memory. And then, there were a few other ones. But this notion that you can compare what the smart money is doing with the rest of the market, I think is a pretty powerful concept.
Yeah, certainly. And it makes sense. I mean, Aave, like probably most of the whales would rather deposit in Aave than like other smaller lending protocols or something, because they just have the massive volume that serves to whales.
Yes.
And so like, let's say you have a friend and like he wants to invest like a big sum of money like into stable coins and earn yield. Like he doesn't want to go into crypto. Like what would you recommend someone to earn yield with, like let's say like 100,000, like not financial advice or anything here, just like hypothetically,
real like, hypothetical friend, right?
Hypothetical friend, yeah, exactly.
Hypothetical friend asking for entertainment input. So you said if they don't want to do crypto, you mean like if they're okay with stable coins though, right?
Right. Yeah. They want to invest, but they don't want the price fluctuation from crypto. They just want like to earn yield on stable coins because they heard like, okay, stables are much better than your local bank account. So
I mean, This is I'm going to give very the purists on crypto might get upset with me if I give this answer, but taking into consideration that there is a UX challenge here as well, right? Like you have to get $100,000 into crypto somehow. I think honestly, they might. I mean, there's also risks involved with this, but using CeFi platforms like centralized finance or like centralized exchanges effectively, or lending platforms, might be the easiest. Now I'm talking about the easiest way to get started, where you have decent yields and you don't have to worry too much about managing your own keys, for example, which is it could be potentially an issue for someone who's never used crypto. And then I don't know if I should mention any of the names specifically, but I mean, it gets a little bit boring if I don't, right? So I guess like some of the platforms, then you have to do your own research on these and the risks involved, etc. But I think there are platforms like Nexo, for example. BlockFi now has had some issues in the US when it comes to regulators there, the SEC and so on. But probably using one of those, maybe using a centralized exchange that will give you yields, like could be FTX, could be Binance. I haven't looked at the most recent rates, but this is like for someone who is not a crypto native, they've got a decent amount of money that they're willing to put into this and they want to get yields. They don't want to mess around. They don't want to expose themselves to smart contract risks or custody risks when it comes to managing their own keys. Like honestly, that's probably what I would recommend to get started. And then if they want to get more into the deeper stuff, maybe then you can say, well, if you have some funds on one of these places, now you can actually withdraw it, right? You can withdraw it as USDC, and then you start getting them onto the rails of crypto after that. That's probably what I would recommend, and it kind of mirrors the onboarding flow that many people have had in crypto, where they start with Coinbase, for example. And of course, the crypto purists will not be like happy about that advice, but in reality, that's an easy way to get started. It might not be the most fee efficient way to get started, but it is very easy to start there and then go down the rabbit hole afterwards.
Yeah, and you make a good point about this fiat to initial onboarding into crypto aspect, the UI, UX design and process not being totally efficient. And there has to be a multi-step process there for someone newly entering into the market and starting to earn the yield there. But anything's better than the less than 1% they're giving in savings accounts these days. So I'm sure it's going to be worth the risk they take. So talking about Ethereum trends here. So thousands of new builders have joined the Ethereum ecosystem over the past years. ETH Denver recently happened, or is happening, and was a massive event. How do you see the rate of innovation in the Ethereum space currently? All the people there building, just copying each other, trying to build a quick cash grab, or is it truly bearing long-lasting, innovative concepts? How do you see that curve developing?
Yeah, there's no doubt that Ethereum has one of the strongest developer ecosystems in the world across industries, not just in crypto. So if you look at the rate of innovation in the last, I mean, depends how far back you want to go, but even just the last like 2, maybe 3 years, there are so many concepts that have been introduced and concepts that have been created on top of those concepts, right? If you think about DeFi, even something like liquid staking with Lido is like a concept that's actually kind of strange if you think about it. Like first you had to come up with staking, which okay is fair enough, is a concept you can understand, but it's a little bit convoluted and confusing. And then now suddenly someone is saying, hey, you can actually create some financial instrument, if we could call it that, or a financial product, where you actually can make that staking piece liquid and you can trade it. And by the way, you can also provide liquidity for that and the stable asset that's underlying it, or the stable pair rather, of those two assets, like staked Ether and Ether on something like Curve. And all this stuff you can just do permissionlessly, right? There's a lot of innovation just there, right? And so then there's no doubt there's been an insane amount of innovation in the last few years. And then the question, I guess, now is, with a lot of hype, especially from, I mean, the DeFi summer in 2020, I think definitely kicked off this run of sort of copycats and kimchi swap, or all this stuff that was going on after Sushi Swap's vampire attack, which I think actually Sushi Swap was a very, very creative and innovative fork on Uniswap. And then, of course, people forking Sushi Swap with Sashimi Swap or Kimchi Swap or all these different things, right? Maybe less innovative. But then, so I think that there's also an optimistic way to look at the clones and the forking and all that stuff, and that it's kind of an evolutionary process. And you see this in the NFT world as well. Someone like literally will take a concept, copy it, and then they will make very slight tweaks. But this is very similar to an evolutionary process, where basically you have these slight mutations, and it's survival of the fittest. Like a lot of these NFT collections, a lot of the yield farms will just disappear, they'll go to zero. But some of them will stick around, and maybe those mutations that people at some point thought were stupid made sense, right? So I think there's kind of like, that's the higher level, almost like macro interpretation, even if the micro behaviors of the forkers are not necessarily with the highest aspirations or the best intentions. Even that behavior can perhaps create something that is innovative through experimentation, like very, very rapid experimentation. So I think that's like the glass half full way of looking at forks and clones, both in the DeFi space, NFT space, and so on. But there's so much stuff that goes on, I think, on the like, if you can call it, almost like, it's not literally layer 2, but like later versions of DeFi projects that build on some of the building blocks of earlier DeFi. So things like options protocols, and then, you know, leverage trading protocols, which like perpetual swaps and things like that, which can build on top of lending protocols. Like, there's an insane amount of innovation going on there. But I think what is very unique about crypto is that it has this composability aspect and permissionless aspect, which means that the innovation can happen exponentially faster because people can build on the stuff of other people. And so that's why I think that's also what attracts a lot of smart developers to the space. And maybe one last thing I would add, you shouldn't forget the hackers and people that do exploits, right? Like, these people, you could argue, similar to the people forking and cloning stuff, they're doing something which is maybe bad or ill-intentioned at the micro level, but it makes the whole ecosystem more anti-fragile, as you have these attacks and people have to make their own platforms more robust. So I think like there's a lot of reasons why I think you have tons of smart people flocking to the space. It could be just because they want to fork something and they understand the technical stuff behind it. They want to make a slight mutation to it. It could be because they want to build on top of all this really new infrastructure that's being built out in real time by other smart developers. It could be because they want to exploit those products and make a lot of money. And in a way, that's a good thing as well, depending on how you look at it. So I think there's no doubt that this is a real, I don't know what the term I should use, but I think this is definitely a breeding ground for very, very bright and capable developers.
Yeah, I love that analogy to like the evolutionary process, a la Charles Darwin, basically, like things just like, yeah, new mutations coming up or like innovations coming up, and either they're being adopted or not. And it doesn't even like, they don't need to be successful, but it can just be something that other people see and learn from and develop further and so on. Yeah, even there's probably sometimes also like a lot of innovation maybe like getting lost in like, okay, because if something is not successful and even it can be innovative, it may not be adopted or something. But yeah, it just like, it starts the process of like further developing ideas and so on. So yeah, that's beautiful about yeah, the whole ecosystem, everything is open and transparent, and everyone can learn from each other. And yeah, I also see that most strongly in like the Ethereum ecosystem. So I wonder, like, what do you think on like the Ethereum ecosystem? What does it take to truly take off? Let's say like Ethereum 2.0 is launched. What's the missing piece for Ethereum to really get like real world adoption and really catapult to like a new level of adoption?
Yeah, so I think in the last few years, one thing that is a bit sad with I mean, not just a bit sad, but it's really sad with the Ethereum ecosystem, if we can call it that. You can also define the broader Ethereum ecosystem, almost like the broader Manhattan area or something, broader New York area or something like that. And you could include EVM chains, right? Like, is Avalanche part of the Ethereum ecosystem because you have Ethereum developers, Solidity developers who can roll out stuff on Avalanche as well. And then there's L2s and so on. So I think yeah, there are a few things to consider here. Probably the main thing that I wanted to mention initially about something being sad is that Ethereum has kind of lost the new user, like the newbie, at least temporarily. Hopefully it's temporary. But if you recommend someone getting into it, Ethereum, and they like the question you asked me earlier, that's with someone who has $100,000. But if someone has like $100, there's no way you can recommend that they start using Ethereum, unfortunately. That was not the case in 2019, for example. You could start using Ethereum for like some tens of cents or a few dollars if you're doing something more interesting. And now there's just no way you can. The barrier to entry is just way too high. So they are kind of forced to go to other chains, or they have to start using layer 2s. And the big hope is, of course, that layer 2 solutions will make it more accessible to new users who might not want to spend $50 to make one transaction on Ethereum. And by the way, all of this stuff, I'm a huge Ethereum fan, right? So this is not like FUD or anything like that. It's just the fact. Like, if you speak with anyone who's new to crypto, you just cannot really recommend that they start with Ethereum anymore. And so then we get back to the point I was making earlier that it depends what we define by Ethereum, right? So I guess it's pretty straightforward to also include the layer 2 solutions, right? So something like Arbitrum, Optimism, ZK Sync. And so these solutions, I think we're relying pretty heavily on those. That's one thing. And with Ethereum too, I mean, at the end of the day, as far as I understand, like, there's nothing in Ethereum 2 in itself that will magically solve, gas price and things like that. You still have to rely on layer 2 solutions, right? So that's one thing. And then I guess, of course, there are other good things coming out through Ethereum 2 rollout. The most notable one is, of course, that we're transitioning over to proof of stake. And this is a good podcast to be talking about that on. So the environmental, again, that's another thing you can discuss, right? The actual environmental impact of proof of work. But I think most people will agree that any way you twist and turn this issue, proof of stake is still more environmentally friendly. And so, at the very least, you'll be able to silence the critics who have a lot of issues with proof of work. So I think that's like another big thing where that narrative you can sort of regain. Ethereum can like go back and claim that narrative and say, hey, all this FUD about NFTs and whatnot, burning down the rainforest, is definitely no longer going to be an issue with proof of stake.
Definitely, so many different benefits coming from the upgrade to proof of stake. It's going to have profound effect. But speaking with the current situation, a user may turn to alternative layer 1s that have cheaper gas fees. What alternative layer 1 do you think has the highest chance of success in the long term? We're talking like BNB Chain, Solana, Cosmos ecosystem. What do you think? Polkadot.
Yeah. So first of all, disclaimer: I would not claim that I have tried all of these blockchains, and nor have I researched all of them. There's just too many out there. But I mean, I know a few things from looking at the data on some of the chains. So something like Avalanche. I actually a few of the chains that we also support these chains on Nansen because of the activity that they have. We like when we consider which other chains we want to support on Nansen, we started with Ethereum. The philosophy was nail Ethereum and then scale to other chains. And then if you look at Polygon, it has tons of activity. If you look at Avalanche, it has tons of activity. And the interesting thing about Avalanche is that the number of transactions have been increasing pretty much linearly since mid 2021, but the total gas costs for users has been pretty constant, actually, due to some optimizations that were made late 2021. And so I think Avalanche is an interesting ecosystem, also Polygon, Phantom, and then there are some other chains that are still a lot smaller, like CLO, for example, which is kind of a different thing where they focus more on mobile, which is still very, very small compared to these other chains in terms of activity. And you also have BNB Chain, which I think in many ways opened Pandora's box after in 2020 with DeFi summer, and when sort of the demand for Ethereum kind of spilled over and just went into all these other chains. That's kind of how I visualize what happened. And BNB Chain was kind of the chain that first showed that, hey, you can just make another EVM chain and you can pretty much fork Ethereum. And it wasn't the first chain to do this, right? It was Tron did this in the past as well. But this was the first one where you actually saw real usage with millions of active addresses and so on. So I think that whole EVM ecosystem, and I talked most about EVM chains for now. There's a lot of activity there that's organic, and again, you can debate what's organic and not, but definitely chains that are worth looking at. Then I think there are some non-EVM chains as well that are definitely having traction, and because of that, we are working on integrating them with Nansen as well. And so the two big ones I would say are Terra and Solana. And so I don't have the stats on Terra users top of mind. I know for Solana, we're talking maybe probably more than 2 million users. Again, we don't know if all of those are individuals, but through stats from Phantom, for example, which is the main browser-based wallet, and now also a mobile wallet, we know that there's at least 2 million downloads, I think, if I'm not mistaken, around that number, and pretty much all of them are using Solana, right? So that's another one that's really interesting. It makes different trade-offs compared to Ethereum, of course. It has much higher throughput, much lower transaction fees, but a very different model overall on how to run a blockchain. I don't know enough about Polkadot, and in a way, I kind of, maybe I'm very myopic here, but I kind of see that as a little sign that maybe it's not as big. But I could be wrong. Maybe there's a lot of Polkadot users somewhere in the world. Someone asked me about Filecoin today as well, and I kind of have the same feeling. I just have not really spoken to any Filecoin users, but maybe I live in my own bubble. So I think there are some non-EVM chains like Solana and Terra, and there's several EVM-based chains. By the way, I put Avalanche in that category, but it's a bit more nuanced, right? Because they have the C chain, which is EVM compatible, but they have other chains and they have subnets and so on. So it's a bit more complex there.
Yeah, great points. Solana definitely has one of the highest users. And that's also what they're targeting, I think. This is really, it plays well. I don't know what the claims are for other chains, but yeah, I'm very sure Polkadot is not used as much as Solana. So like,
I mean, you guys would also, yeah, on this as well, because can you guys hear me now?
Yeah, we hear you. I think the connection was just a bit slow there from your video, but hearing you well now, no worries.
I ask you about your perspective for stake, right? So
yeah, I think the connection is a bit chopped off here, right, Ken?
Yeah, I think so, Alex. It's chopping in and out. Let's see if we can get a restable connection there.
Yeah, but anyway, I think I got your question, Alex. You were asking like, what do we think has like the highest adoption, kind of? I mean, that right? Like, which chains are like used like mostly? And I would definitely agree with Solana. And it's interesting, like, because there are different staking concepts, and even something like Cardano doesn't have like a lot of smart contract usage or anything, but there's a lot of like, there's a big staking ecosystem around it and a lot of validators. And just like from the amount of like unique delegators, Cardano is definitely like much more used than Solana, but obviously like there are no smart contracts or anything, so that's a different story. And it's much easier to build on Solana and so on. But just from the staking ecosystem itself, yeah, like this often diverges a lot from like the actual like smart contract usage or something, which is pretty interesting. And yeah.
So maybe I can take the chance to ask you. Can you hear me better now? Is the connection a bit better? Okay,
much better.
So I like to make fun of Cardano on Twitter, and it could be because I don't know enough about it. But can you do anything else on Cardano than like stake? I mean, or like how does it work? Like, can you actually do anything with it?
That's a very good question. I don't think you can do much with it. So I think all the critiques are definitely they have their right to be there. But I mean, I think there's just like they do have smart contracts, and they recently had like one, I think like a DEX or something, which hit like 1 million in TVL or something. So it's not much in TVL, but at least they have something that seems to be working. But yeah, I'm not using it. I don't have more details on it as well, but it seems like it's very, very slowly picking up. I don't know what the growth rate is there. I think other networks are still like they have more momentum. Even something like a near protocol or something, they're growing at a faster pace than Cardano. I think even they are like at the same stage of kind of rolling out their actual usage and utility.
Yeah, just to give some numbers on total stakers, sourcing this from stakingrewards.com. For Cardano, we're looking at 1.17 million total stakers. Solana, about 400,000 total stakers. So at least people know how to stake in those ecosystems. And in Cardano's case, once they finally figure out, efficiencies within the smart contract capabilities, you might see more applications pop up, and you have a big pool of people that theoretically already know how to participate in staking. So I wonder if they finally get the smart contracts together, applications built, you're going to see a lot of participation in DeFi projects on Cardano, for instance. But definitely interesting numbers to look at, interesting participation from users in those layer one protocols. But going into the next question here, Alex. So what would you recommend to someone who's relatively new to crypto? What is the best way to get them involved in learning, basically how to start participating in staking, for instance?
Yeah, so what I normally recommend is, so first I think you have to get a Twitter account if you don't have one. And basically, you can start trying to follow a few other people in the crypto space. I mean, there are some extremely funny accounts to follow as well, right? Like Kobe and the Crypto Dog. There's a bunch of great accounts out there, and then frankly, you can just look at which accounts other people are following, and start like following the same people. Like if you find my Twitter account, which is a Svanevik. Then you can just see who I follow. I think I follow around 1,000 people. Click on a few of those, and now you've kind of cold started your own Twitter following. So Twitter is a very important channel for information, just to get started. And then you can actually start just like DMing people, which is what I remember doing in 2017. And I actually made a lot of internet friends just in DMs with other people. Either they would DM me or I would DM them. And it's funny how open-minded and happy to chat a lot of people are. Right now, unfortunately, I can't I can't be so active in DMs anymore. But it was very nice when I had a bit smaller account back in the day. But that's something that anyone can do, and like just reach out to people who are like in this crypto Twitter space. Then from there, I think it's good to start following some kind of longer form pieces to educate yourself. Like Bankless, I think, is a good source. There are a few other good like Substacks. There's one by Joel John that I think is good. And then I think eventually you want to try to get into a few Discord channels, maybe with some DAOs, and just try to engage with people. And of course, you should be careful not to get scammed or anything like that, but just to kind of learn and see what people are doing. I think that's all of these things are good. And actually, when I set up my own ETH2 validator to stake ETH, I spent some time in one of these discords to actually troubleshoot and get some of my questions answered. So I think that's relevant for staking. It's relevant for basically anything that has to do with crypto. And then you sort of expand from there. It's like you sort of branch out and you go down different avenues from there. But that's kind of a good core to get started with. Like you get a Twitter account, you follow some crypto Twitter people, you start jumping into a few of these discords, try to avoid being scammed by some random fake NFT collection or something. And get some long form content that you can follow to educate yourself.
That's awesome. Yeah. And I mean, it's always fascinating to see like how helpful and active the communities are. Like you just randomly DM someone and like they have something like when you set up your ETH validator or something, that's like the communities are extremely helpful. So
that's
yeah,
right.
That's awesome. And so talking a little bit about the landscape of crypto data aggregation, obviously you've built like a massive industry leading tool there at Nansen. Like what do you think will the future look like for crypto data aggregation, crypto data businesses in general? Like let's say for the 5 years from now, where do you as a company and like personally also like see opportunities and challenges?
Yeah, I think first of all, the pie is growing. So there's going to be room for lots of different models and lots of different companies that operate both at the kind of universal level, if we can call it that, and also at the niche level where you're looking at a specific pocket of crypto activity. I think in our case, we've started with on-chain data. That's our bread and butter. And so, and what I would call enriched on-chain data. So you have these behavioral labels, you have entity labels on top of the on-chain data. I think it's going to get harder and harder as the world becomes more and more multi-chain. I don't know if we're going to just have an infinite amount of chains, probably not. But even if you consolidate to like a handful of big blockchains, you're probably going to see activity across those, and each of those is going to be really hard to keep up with on its own. So even in just the on-chain data domain, which is where we play today, there's going to be tons of work to be done, especially when it comes to attribution, which is the fancier word for wallet labeling. So the attribution efforts you're going to have to put down as more and more people get active on blockchains will just grow, right? So you have to have really, really good systems. You have to, you can't rely only on, human input, obviously. And that's also the case today. Like 99.99% of our labels are algorithmically generated. So I think it's just going to get harder harder. And it's even with layer 2s as well, right? It makes everything even more complicated when it comes to on-chain data. But for a company like ours, I think we will also go beyond on-chain data. And so there's other types of information and data pieces that you'd want to have. Obviously looking at, for example, your website, like the stuff that you guys have, which is not that's not something we cover. But it's just such a good example of something that's super useful, right? Like looking at stakingrewards.com. And I think I haven't even considered if we would start doing something similar. I don't see why we should if you guys are doing a great job at it. Like I generally tend to think that we should be adding data assets that that you don't really have good alternatives for today. And that's why I made that sort of maybe arrogant comment when you asked in the beginning, like what were you using before? Like, frankly, there weren't any good products to do the stuff that we are doing today. And that's why we built it. So I don't really see us kind of going out to try to create stuff that already exists in the market. Like the reason we would create stuff is if we don't see good enough solutions for it today. And so, and there are some areas I think can still be improved dramatically. I do think like news aggregation and also like longer form content, there are some okay solutions out there, but I think it could be a lot better. Also, if you tie it in with on-chain data and if you tie it in with crypto, like market data, there's a lot more interesting stuff you could be doing, especially if you can try to make certain like predictions and inferences from all of this together, then it starts getting really interesting. And then market data as well is not something we've focused on so much. So I think I've said this before. I think that the way Nansen focuses on on-chain data is a bit like how Amazon was focusing on books first. It was just a really nice niche for them to focus on initially, but then you can grow and expand into other niches. And so I don't think even we will only do analytics, data and analytics. I think we will probably start moving into other things like social, because there's still a lot of problems that we need to solve when it comes to social networks in crypto. We only use, or we primarily use channels like Discord, Twitter, Telegram, all of which are, highly centralized and non-crypto native platforms that we've just adopted. But maybe we should have more crypto native social platforms, and maybe we can play a role in that. And similarly with transactions, if you're using Nansen for your information and potentially some of your social network, it seems like it would be a good idea to also be able to do transactions in our interface. So I think there's a big area that we can move into, but the pie is really, really big, and I think there's going to be a lot of different products and solutions that are going to be successful. And sometimes one product or company or project will pursue one path and another one will pursue the inverse path, and they can both succeed, right? They can both take different parts of the market. So yeah, I think that's a very broad answer, but hopefully it shed some light on what I think about the topic.
That's awesome. Did you see the recent from Etherscan, they launched this feature where you can private message certain Ethereum wallets and stuff?
Yeah, I did, and I guess I can't say too much about it yet, but let's just say we felt like we got front run on that one. But yeah, it's good though. It's good. I mean, it's good for people to have options, right? But yeah, so stay tuned on that one.
Awesome, and good transition into the next question here. So, are there any new data points or new features coming to Nansen down the line that you're excited about?
Yeah, definitely some other chains like Solana and Terra. I mean, personally, I find it hard to engage with these chains and use them because I want to have that X-ray vision that you get by using Nansen. So I don't like feeling like I'm in the blind. And so I think that's going to be huge for us and hopefully for those ecosystems as well. So that's one thing. There's a lot of cool stuff happening on the NFT front. We just released an NFT price estimator, which effectively gives you a machine learning powered estimate of a specific NFT. So you can say, hey, my Bored Ape is number 69. What's the current market value of that, or the current estimated value or price of that NFT? And maybe it can help you if you're looking to sell it, what you should place as a fair price if you put it up for sale on OpenSea. Or maybe if someone's bidding on it, you can check it in the NFT price estimator to see if you think it's fair. So that's and we're going to be doing more. Like, we're going to roll that out for, you know, at least thousands, if not tens of thousands of collections. You have to train the model for each different collection. You have to verify that it is relatively accurate and so on. So that's pretty cool, and I'm pretty excited about that. And then there's going to be much more Web3 native features. So we just talked about something around social. I mean, that seems like it's a good area, but also just for convenience, things like logging in, or more easily tracking your wallet from connecting with your Web3 wallet, right? It just seems like that's something you should be able to do in Nansen. So the overall 4 stages that I've talked about a few times elsewhere is kind of, we started out as an analytical platform, then we moved to become more personalized and personal, in that you and I might not be interested in the same things, so we will be shown different things on the platform. Like, you might care about some tokens and NFTs, I might care about something else. Then there's the social layer, and then there's ultimately the transactional layer. So these are like the 4 stages at a high level. And so you can sort of, some of the specific features, we can sort of announce them ahead of time. Some of them we have to keep a little bit under the radar. And then there's other things that maybe you can imagine within that framework, and you can reach out to us and ask for it, and maybe we will implement it.
That's awesome. And actually, like how do you see yourself, like compared to like an Etherscan? Is it like, do you see yourself as a block explorer of some sorts? Like, I mean, obviously you are, like, people go and they explore like the chain at Nansen. But do you think you will also like transition more towards like more raw data in general, or like it's really like you're going the path of like enriched data, and like, yeah, you mentioned not just data analytics, but more going into the direction of other features, right?
Yeah, so I see Etherscan and Nansen as highly complementary. I personally think of Etherscan as an encyclopedia, whereas Nansen is a newspaper. So if you want to look up anything, you go to Etherscan, right? If you already know what you're looking for, or you're looking up a transaction, you're looking up an address. But if you don't know what you're looking for, and you just want to figure out, hey, what's going on in the world today, you would go to Nansen for that. But then, of course, you can drill down, right? If you discover something through Nansen, you can drill down to the individual address and so on. You can't actually go to the transaction. Like, we don't have a way to visualize a specific transaction today, which is one of the main use cases for Etherscan, of course. So we're happy to just link to Etherscan for whenever we want to reference a specific transaction. But I think of Nansen's mission as surfacing the signal, and that's a bit different, I think, from the Etherscan's mission. And as I said earlier, we can play very important roles in the ecosystem with 2 very different models, and they're both important tools, and I use both every single day.
Yeah, 100% agree. And I think the crypto data market is also, it's just at the very start of what is possible, because everything is on chain, everything is open and transparent. So yeah, that's exciting. Big growth trajectory for any crypto data company, I think. And like, just finishing up the episode here, like one last question. Like, what do you, like, in your opinion, like, where are the best opportunities for yield right now, like across the entire crypto ecosystem? Anything that you are looking at, or like that you are interested in, or like that you recently saw that is like, yeah, having good yields for people, like crypto native kind of?
Yeah, I do have one account that is basically public which you can see in Nansen. And so I do some stuff with that address. I wouldn't say it's the highest alpha address to follow, but one that I have been yield farming from lately is on Avalanche, actually, and it's called Platypus Finance. And do your own research. I will not, but I've been farming that one for a little while, and I kind of like the concept because it's a very similar model to Curve, but it has some of the kind of the aspects of something like convex finance or something like that kind of rolled up into it as well. So the idea is very simple, that you have to stake the Platypus token to boost your yields from certain pools, and the yields are just emissions of PTP or Platypus tokens. And you can take those Platypus tokens, you can stake those, and you get a voted escrow or VE PTP. And the more of those you have, the more you boost your yields. So basically, like, as you accrue more of these tokens over time, you can get higher boosted yields. And it's a product that I think any blockchain needs, just like stable asset exchange, like Curve has on Ethereum and actually on other chains as well. And their model, which felt like one of those useful mutations that I talked about earlier. So yeah, do your own research, not financial advice. Could go to zero tomorrow. We could all get rugged. I have no idea. But it's an interesting one that I've been yield farming on a bit lately. And then for a more meta advice on, instead of me mentioning specific names, I would definitely look at the hot contracts tabs or hot contracts features in Nansen, where you can see capital flowing into new smart contracts. That's like another great, that's actually how I found Platypus. I literally just saw it in Nansen as like the second highest inflow of capital, smart money capital, because you can qualify who the capital is sent from, right? And so that's how I learned about the Platypus Finance project and decided to put some stable coins into it.
That's some absolutely amazing advice there. Follow the hot contract filter and look for the smart money as well. Kind of play off those two data points off Nansen. So the proof is in the results coming from the data that you guys aggregate. So really good stuff here, Alex. And where can people go to follow you and learn more about the stuff you're working on with Nansen?
Definitely go to nansen.ai for the website, and you can read a bit more about it. Thank you for putting it up there. You can also follow Nansen on Twitter, Nansen_AI, and you can find me as well, Svanevik, on Twitter. Thank you very much for posting it there. So that's the best way to follow me.
Awesome. Thanks again, Alex Svanevik, the founder of Nansen. And for everyone watching, you can check out previous episodes of Staking Mondays on YouTube and also Spotify. Be sure to subscribe to our channel, like this episode, share it around, and as always, guys, happy staking. Thanks, Alex. Thanks, Mirko. Take care, guys.
Thanks, guys.
Thank you.